Forget about jobs. The midterm elections will be here before you know it on November 8th. The Democrats are expected to win the Senate. The Republicans are seen winning the House. But of course, anything could happen ultimately. And before the midterms, there will be a Federal Reserve meeting on interest rates on November 2nd. That decision and the stock market reaction could then affect election turnout and influence House stocks and the year. Sozzi has more numbers behind all of this on his take. Like, forget about jobs. We're all focused on jobs today. You're always a step ahead, Brian Sozzi.
Yep. Yeah, well, when everybody zigs, I usually try to zag. So I might be the only one in financial media talking about the midterm elections today, which is good because that's what we're here for, Yahoo Finance, prepare investors for what might come 3-6 months down the line, or in this case, November 8th. So we're looking at the midterm elections. And of course, before that, you have that Fed meeting on November 2nd. But here's what we have up for grabs here, just to set the scene for those midterm elections. Lots up for grabs, and hence you will probably see the market really focus on all things midterms. We have an interesting chart, too, just to get a vibe of the economy into Election Day. And it's the misery index that comes compliments from the team at Jefferies. It is essentially the unemployment rate plus the inflation rate. And you've seen that spike as a result as consumers battle, obviously, high levels of inflation. Now, in terms of stats, I want to just zoom in on a couple interesting ones here from U.S. Bank that caught my attention. The S&P 500 has historically outperformed the market in the 12-month period after a midterm election with an average return, get this, guys, about 16.3%. That is pretty good. I will also note the last time the S&P 500 produced negative returns during the 12 months after a midterm election was 1939. Well, what was going on there? As a reminder, because we were not on this planet, that was the Great Depression in World War II. So I think the market is going to be coming up against a lot of headwinds and concerns regarding this. We talked to Lori Calvasina yesterday at RBC saying, when she talks to her clients, they wouldn't mind Republicans getting a little more control of things here, maybe some divided government, maybe some of those more aggressive areas of the Democratic agenda don't get through, maybe markets like that. But again, that's a lot of ifs and that's a lot of whens. And my take here, going back to an old school James Carville quote, it's the economy, stupid. And I think it will be very interesting to see how voters come out here on the 8th. Do they vote with the economy or do they find something else or another issue they're very focused on?